What's up, you guys? It's Rob here again. I wish I was bringing better news into a video, but today we might be starting to see the house of pain upon us because this stupid cargo ship is still stuck in the damn Suez Canal and can't freaking move and is blocking the whole channel so that cargo ships can't get through it. So it's gonna affect our supply chains, it's gonna affect our goods and commodities and all that kind of stuff, and it's just another thing to add to this very touchy market that we got going on here ever since the start of February. It seems like the market's just been going nuts on every little last thing. Oh no, the bond yields have risen to 1.55 on the 10-year. Oh no, the bond yields have risen to 1.66. We're gonna see inflation. The Fed doesn't know what they're doing. I should move out of my tech position and I should move into my recovery position because recovery is where it's gonna be safe because I'm already red in tech and I want to be green in recovery and I want to ride the recovery wave. Just get out of here with your paper-handed sissy techniques of trading at the bottom. You might as well just go pull your money out and just use it elsewhere at that point, because it's not going to do you any good in recovery, because you're going to lose money just pulling it out simply. So this isn't financial advice or anything like that, but you shouldn't be investing in the stock market if you don't have high conviction within your stock positions. If you don't have that high conviction, then don't put your money in it, because at that point you're just throwing money against the wall and you're better luck in a casino at that point. But anyways, getting back to this video and getting back on topic here, but personally I think this is absolutely ridiculous. Everyone is overreacting. This is a bunch of fugazi. Like we just need to take a chill pill, relax, understand that we're going to see short-term inflation here in March and April and May, because last year we were in the middle of a pandemic. Everyone apparently is forgetting this. So we weren't doing anything for those 3 months last year. So of course our inflation year over year is going to be high because we weren't doing anything. No one was going out to the mall. The malls were closed, the restaurants were closed, the bars were closed. A lot of these things were closed. So we weren't spending our money like we were. My bad, like we are now, kind of thing. So, and when you take a look at the month-over-month CPI data, it came in at 0.4%, which was apparently lower than expected. And the only two things that were higher were food and energy. And if you take those out, it drops to 0.3. Now, personally, I'm excited to get the month-over-month inflation data in on April 13th. And once again, we're going to see that it comes in lower than expected. Now, when we see our year over year, I'm expecting us to see like a 2.5 to like 3.5% inflation for March, April, and May. But getting back to it, to explain what CPI data is, it stands for Consumer Price Index. So if we were to buy certain goods last month in February and compare them to where we are now and measure the difference of how many cents it was or the percentage of change kind of thing, that would be our CPI data. Now, the only things that CPI really don't include are asset prices like stocks and real estate and a few other things, but those things have hidden inflation and all that kind of stuff, but it's completely separate than what the CPI is. And we really want to be focused on the CPI data because that's really what the Fed is aiming to take a look at. But the whole deal with the Suez Canal and the boat being stuck in the Suez Canal, these things are going to be problems that we're going to have to deal with because the supply chain is going to have issues, and it's only going to get worse the longer that this boat is stuck in the Suez Canal. If this boat is freed, hopefully Sunday night or Monday, then of Sunday night, which is tonight, or Monday, which is tomorrow, hopefully then we won't have such a large impact. But from what I've been reading, people are saying this could take 10 plus days. It could take weeks. They don't know. I even read an article somewhere that was saying that the Egyptian president or something like that was thinking about getting a crane and taking the containers off one by one and doing something with them. Like, it's not a good situation. And if we roll into Tuesday and this boat is still stuck, we're gonna have major supply chain issues because, folks, the boat is stuck 30 feet under the floor of the damn canal. Pardon my language, but it's stuck 30 feet under the canal. And this is a canal that allows goods and products to move from China, India, and really far eastern Asia countries in the Middle East, up through the Suez Canal, into Europe, into Northern Africa, over into North America, Central America, and South America. Like, it's a very important trading channel, and 90% of our trades are literally done by boat. So all of our goods, 90% of them come via boat. And the Suez Canal has roughly about 12% of that trade volume moving through that canal. So needless to say, it's a major problem. And the only alternative is to go around the southern tip of Africa, which is rather dangerous, to say the least, for maritime people, because you have the Indian Ocean and then you have the Atlantic Ocean clashing against one another, one of which is a warm current and one of which is a cold current. And on top of that, we're going to add another 6,000 miles to our trip to get where we're going, and we're only going to be traveling at 14 knots an hour. We're not going to be moving at 40 knots an hour. So we're going to be taking like 18 to 21 days to get to our next intended destination. That's the detour that these ships are going to have to take around the southern tip of Africa to get where they're going. And our supply chain is so focused on getting things to a factory or a port 5 minutes before it's intended to be there. So it's there, it's put on the boat, or it's put on the truck, and then it's sent off to wherever it needs to go. It doesn't sit. Now, you're telling me adding 3 weeks to this commute is not going to be a large problem? No, you would be lying. This is going to be a huge problem. That means we're going to see inflation go through the roof probably because of this. Because now we're going to have to wait 3 weeks for our products to get here. Unless if this boat somehow magically gets unstuck. I really hope it does, because I don't want to see short-term inflation, because if we see short-term inflation, the market's going to freak out even more, because now the bond yield is really going to go through the roof, and we're going to see inflation, and then everyone's going to be like, oh my god, the Fed was wrong, we're seeing inflation, it's so much worse, the sky's falling, kind of thing. We don't need that. And I don't want that, because when that happens, everyone's just going to pull out of the economy, and it's not going to be a good thing. We want to have the supply chain working the way that it should. We need to have things working the way that they should, because if we don't, it drastically affects the stock market. And it's like the perfect case scenario is NIO. NIO had to shut down their production facilities because they cannot get their hands on enough chips, and they're suffering from shortages of semiconductors, and they're only in Semiconductorville. Only in semiconductors. So imagine how we will feel when these cargo ships are adding 3 weeks to their commute. Oh, whoops, it's not a big deal. Guys, I'm totally not freaking out on the inside. No, I am absolutely freaking out, because this is a big problem. And every single time you see a picture of that boat, the word that I want you to picture with that boat is the word inflation, because it is taking all the goods from Asia and China and bringing them over here. Goods like ore, car parts, computer parts, chips, coffee, all these kinds of things. Like, they're coming over here, and now they're going to have to go around the southern tip of Africa before they get here into the United States, which is a problem. And why is this potentially bad? I personally think we'll see lower over month-to-month inflation. But now But now, because there's a boat stuck in the freaking Suez Canal, we're probably going to see higher short-term inflation month over month, and probably May, because the data for April has probably already been sealed off. But if it hasn't, I'm sure we're going to see a more of an increase if this ship isn't unstuck. So, yay! Like, prepare for the house of pain, because I'm preparing for it, because it's not going to be fun. And we're going to have all these paper-handed sissies being like, oh, tech's selling off, tech is not worth what it is, and let me go put myself in the recovery. Whatever you do, just don't do that. Just stay where you are, stay in your highly convicted stocks and buy the dip. I mean, this isn't financial advice, but moving yourself from a negative position into a green position and hoping for a better return isn't going to help you. In the end, all bull markets outlive bear markets. They're always longer. So you just gotta stay convicted and you gotta stay patient. But getting back into this. So really, short-term inflation is probably gonna go up if this situation isn't resolved by Monday evening, I'm gonna say. So, and we're already worried about short-term inflation. The market's trying to already price that in, and then as soon as we get this data, it's gonna just shock the market, and it's not gonna be a good thing. Now, the huge thing is this. Let me back my thoughts up, because my brain going faster than my mouth can. But the point of this is the ship could very likely, unless it gets broken free somehow this weekend, it could cause a huge spike in inflation and would cause the bond market to freak out again and send yields quickly through the roof, which in turn will send the stock market plummeting, which isn't a good thing. And we don't want to have a very rapid uptick in bond yields, because that makes stocks become very unappealing very, very quickly. And smart money is going to go put their money in bond yields instead of into the stock market. But bottom line is, we just got to be prepared for this. Even though it's funny to buy the dip and put money into our high conviction stocks, we also at the same time need to be careful. While I have high conviction that we are in a W-shaped recovery, we won't see long-term inflation, folks, I couldn't predict that freaking ship getting stuck in the damn Suez Canal, causing potential inflation fears to ramp up. So who knows what's going to go on here, but stay strong, stay true to what you believe. 10 years from that matters from now, and invest in those stocks. Like me investing in Tesla, like I'm looking at Tesla 10 years from now being worth $3,000 a share versus $600 a share. It's all going to be fine. The problem is right now it just doesn't feel fine because everyone is rotating out of tech and into recovery, and only exacerbating this problem and setting stupid stop losses on their stocks, so now they're getting triggered, and then they sell at the bottom because we're just all a bunch of paper-handed sissies / bears, or whatever you want to call it yourselves. And true holders and the people who are going to make money, as Warren Buffett would say, would be the ones who buy the dip and who are patient, while the impatient sell out of the market. And the other saying that Warren Buffett also has is, be greedy when others are being fearful. Be fearful when others are being greedy. And what are people right now? Fearful. So buy the dip. And that's what I'm personally going to be doing. And let me know what your thoughts are, guys. Sound off in the comment section. Be like, this isn't going to be a huge deal. That's not going to be that big of a problem, or it's going to be a large problem, and we're only seeing the tip of the iceberg. But I would personally like to be more optimistic about our W-shaped recovery if it wasn't for this freaking ship being stuck in the damn canal. I shouldn't be laughing about this, but it's just one of those things of of course this is going to happen now. 2020, we got the whole entire pandemic, and now 2021, we have inflation fears and a ship stuck in a major training canal for 5 days. causing problems. People are worried about inflation. Bond yields are going up. Seems like we have a sequel now for 2020. But aside from that, we're about 4.5 weeks in, personally, in my opinion, into this correction. Corrections normally last about 6 weeks. But given the fact that this supply chain is going to be a problem with this boat being stuck in this trade channel, I could see it being longer than 6 weeks. So potentially we're going to be seeing more volatility here come on Monday. And folks, eventually we're going to get to the other side of this and we're going to make that recovery. So just do yourselves a favor, buck up, pull that seatbelt as tight as you possibly can, put your trays in the upright, fasten position, and just prepare to buy the dip. And remember to smash that like button for the YouTube algorithm and hit that subscribe button while you're at it, and let me know your thoughts in the comment section down below. And also I have a referral link, the Webull, in the description of this video. You get 2 free stocks and I get 2 free stocks, and you're in the two stocks can be valued anywhere between $800 and $1,800. You get the first one immediately when you sign up and open up your account, and then you get the second one once you deposit $100 within your account. So immediate 8% return on $100 investment, and it's free. Beats out the S&P 500 right now. So I would personally invest into it. But have a good one, and I'll see you guys in the next one.